So I understand you're ready to improve your credit score. Well, let's talk about it. But first, go ahead and hit that like and subscribe button to stay updated on any future videos.
I always wanted to be a homeowner. Good morning. Want some cereal? I had the mindset that you have to have money. It's all about money, money, money. I didn't understand credit. Never knew what it was until I got older. I want to know, how can I become a homeowner with bad credit and limited money?
As you probably know, credit is a key factor in securing a mortgage, and understanding its impact can help you get better rates and terms. Additionally, your credit score shows lenders how trustworthy you are. Simply put, a higher score means lower interest rates and better loan terms. Lenders look at your past borrowing to see if you pay on time and manage debt well. A good history boosts your chances of approval. You also want to consider your debt-to-income ratio. This compares your monthly debt payments to your income. A lower ratio means you're a safer bet for lenders. Overall, your credit score influences the interest rate you get. Better scores can save you thousands over the life of your mortgage. A lot of people often ask if they can fix their own credit. The answer is yes, you can definitely fix your own credit. And here's how. The first thing you need to do is check your credit report. At places like annualcreditreport.com, you can get a free copy of your credit report from Equifax, Experian, and TransUnion once a year. You should consider using credit monitoring services like Smart Credit to keep an eye on your credit score. Errors can really drag down your score, so carefully review your reports for any mistakes. If you find mistakes, you'll want to write written letters to the credit bureaus to dispute them. Use budgeting tools like Mint to track spending, create a budget, and pay off high-interest debt faster. You also want to consider setting up automatic payments through your bank to avoid late payments, which can hurt your score. It's important to keep your credit card balances below 30% of your credit limit. Use tools from your credit card issuer to monitor this. If your score is low, a secured credit card can help rebuild it. Compare options on sites like Bankrate or NerdWallet. Consider a credit builder loan from online lenders like Self or creditstrong.com. These small loans help you build credit by making regular payments. Finally, educate yourself with resources from MyFICO, Credit.com, and the Consumer Financial Protection Bureau to learn about credit management. You can even use a more streamlined credit software system like Credit Verso to simplify things and track your progress. And guess what? It's free. Now for the dreaded question, how long does it take for your score to improve? Unfortunately, there's no magic number. The time it takes to increase your credit score can vary widely, but some improvements can be seen in as little as 1 to 2 months by paying down balances or correcting errors on your credit report. Moderate improvements typically take 3 to 6 months, with consistent on-time payments and responsible use of new credit accounts. Long-term improvements, which can take 6 to 12 months or more, involve building a solid credit history, diversifying your credit mix, and recovering from any negative marks. The key to a better credit score is managing credit responsibly over time, including making timely payments, maintaining low balances, and avoiding excessive new credit applications. So the question of how long it takes really depends on you and your particular situation. It should be noted, a recent study reveals U.S. credit card delinquency rates have reached a nearly 12-year high, indicating increased financial strain among consumers. This could eventually lead to tighter mortgage lending standards and reduced demand for home purchases. Yikes. That's not good news, and only means your credit is becoming more of a major factor with all lender decisions. Listen, by taking the necessary steps and using simple online tools, you can improve your credit score and make it easier to get a mortgage and other loan types with great rates and terms. I hope this information helps get you started on the right path to more approvals and less declines. Resources mentioned can be found in the video description. Stay informed, stay prepared, and stay ahead. Thanks for watching, and I'll see you in the next video.